Hello, Dilly. How are you?
Hello, George. It's good to hear your voice.
And you. Hope you're feeling better.
I am. I am. I'm feeling a lot better. Sorry about
Good.
last week.
We missed you last week. I was scrambling. I had to have Rob Isbits and David and some other
I
guys
know.
hosting. Was
How did they do?
they did fine, they did well, but not as good as you. There's no one can
Okay.
replace. So no, we survived. I was trying to get Rusty in one day, but he didn't. I sent him the thing at the last minute, so he didn't even see it. Anyway, I could have kept playing that song. It's Dire Straits. For those who don't know it, Sultans of Swing. I can't remember what year it came out, but love that band. Not one of the most well-known bands, but great tune. So Dilly, every day I gotta find something to get pissed off about, and it's been a while. So you want to know what my outrages of the day are today?
Yeah.
My two hot. Okay, so first
Wait,
of
is
all,
it the taco thing? It's the taco thing. I knew it. It's the taco thing.
so we're not gonna ask Peter about tacos, but I'm telling you, this acronym thing is getting out of control. I mean, if this the taco thing was the dumbest thing I ever heard. Everyone tries to be
What does
cute.
it mean? Trump always.
Charlie Polish chickens out or something, right? So
Oh,
then,
yeah.
so then, not to
I
be
keep
not
wanting to say it's capitulate, but
yeah,
yeah, chicken's
not
out.
to be
Okay.
outdone. All these geniuses, all the furus, okay, they come out. So there's tuna. Don't ask me what it stands for. I don't even remember. Okay, and then someone came out with burrito. All right, and like
They're just making me hungry at this
I wanted to
point.
blow my brains out. I mean, I got a bad case of indigestion just listening to all this nonsense. So that was the first thing that made me go crazy. Then the next thing that made me go crazy, and we'll get to Peter quickly. Um, this Bitbon thing. These
I
guys
know.
are
Okay, so I thought about you because I know that you're like anti bit bonds, and I saw today that bit
Dilly,
bonds are
Dilly,
are they have
Dilly,
legs.
Dilly, Dilly, Dilly,
They
Dilly.
have legs,
Shh.
George.
Dilly, no, Dilly, listen to me, listen to me,
Now is
listen.
the time for
No,
you to get into Bitcoin.
exactly. Gotta tell you why, Dilly, I have to do it. Don't tell anybody.
Okay,
Because they all come after me as if I hate Bitcoin, but I don't hate Bitcoin. But
you
if
you love it.
I know I do. I love it. Okay,
Mm-hmm.
so Dilly, I'm going to submit to you, and I'm going to actually buy Bitcoin so I can say
Fuck
I
yeah.
own Bitcoin, even though if it's like 1 millionth of a coin or something like that.
No, you
These
need to
people,
come on, George.
these people though, they don't know basic finance. They're going on about the bit bonds. Don't worry, Peter. You're safe. We're not going to ask about bit bonds, but I want to blow my brains out, Dilly. These people are just like insane. Oh, and then even better, I
What?
have it on tape. This one genius. So I'm not gonna name names, but so they're doing this thing. They're doing a space day. I'm listening for entertainment value, and I guess Powell was speaking, and I gotta go find the tweet. Something about they said the quiet part out loud that the Bretton Woods agreement is over, and I'm like,
Oh yeah, I saw
I'm
that
like, I'm
because
like, I'm like, I'm like, dude, like, you sure you don't want to delete this space? It's like, and
But
they're
did
like,
you
oh,
see, George, that Powell was wearing an orange, a purple tie, so it's bullish.
what is purple? I know what orange means. What does purple mean?
Oh, if his tie color matters. There
Oh,
are people that track the tie color that he wears,
okay. Oh, this
and whenever he
okay.
wears purple, it's bullish. So
So this is the updated version of Alan Greenspan, depending on the size of his
yes,
briefcases. This is before you. I don't know if it's before you were born, but certainly before you were following this stuff. But anyway, so this guy, Bitcoin historian, just in.
yeah.
Jerome Powell said the end of the Bretton Woods era fundamentally changed monetary policy. Like, and then he goes, the Federal Reserve saying the quiet part out loud. I'm like, you have to be so financially illiterate to think that that's news. So, I'm looking.
I think
So,
that's an engagement farmer like
no, no, no,
account.
no, 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 because there's that guy Dark Side. He was
Well,
tripping
they
over
might
himself.
agree with the engagement farmers,
No,
but
but he
like
was saying it. He was saying it in this space, like
yeah,
newsflash.
yeah.
I was like, and then I didn't go in the space. They're calling me out, throwing me under the bus, all this
Oh,
kind of
they
stuff. And,
called
and
you
anyway,
out.
look, let's get off this stuff. We're here to listen to
We
Peter,
got to
okay?
talk to Peter. He's gonna leave.
No, well, Peter has a 6 o'clock hard stop, so we're not going to go on this forever. So, Peter, mute yourself for 1 second. I got to give you a proper introduction here. So, for those of you who don't follow him, Peter St. Onge has got one of the best differentiated points of view on stuff. I mean, he takes you out of the echo chamber of mainstream media and all the garbage, and he really speaks truth. I don't always agree with Peter, but I really like the way he thinks and he explains things. He breaks it down. He's on a podcast. He's got a thing on Twitter every day as well. He's got 260,000 followers, and he's one smart dude. Austrian school. So all you Austrian. So I imagine the Bitcoin crowd's going to love him because Austrian school. If
Oh
you haven't
yeah,
heard him
for
before.
sure.
All right. So Peter, welcome. It's the first time we're together on a space. So welcome, Peter.
Yeah, thanks for having me on. And yeah, I appreciate it. We got tacos, burritos, and bit bonds. Got it. That's
Yeah,
the
you got
agenda.
it. Okay, so don't worry. I know it's not quite what you signed up for, but I mean, this is just my head explodes listening to this stuff. All right, so Peter, I'm going to paraphrase something today that appeared. Someone, Peter, you have some background noise. I don't know what it is, but your mic is kind of getting the story on us.
Is
Joey,
this better?
yeah, it's better. I think. Yeah, okay. So let me just paraphrase. Someone quoted you today, paraphrasing from I think it was your show this morning. This is just to be real brief. They told us the economy was crashing. They pushed fear, panic, and pessimism. They said recession, tariff, disaster, GDP collapse. And they hoped you would not look deeper. But now we have the truth. And it's not coming from Trump's campaign. It's coming straight from the Bureau of Economic Analysis and economists like Peter St. Onge. You pointed out that personal income soared at a 10% annualized rate, up 10% over the recent quarter. Inflation's collapsing. GDP's rebounding. So, Peter, if I didn't know any better, just looking at this stuff, I would say, what's there not to like here? So, Peter, what's sort of your variant perception about what's going on? What do people not appreciate right now? I mean, clearly you're more optimistic than the consensus mainstream media would have you believe. So, why don't you just explain what the grounds for your optimism?
Yeah, so I think the market was optimistic about Trump before he came in. So if you look at the recession odds, for example, right before the election, we were around about 52% on call sheet.
Hey, Peter, sorry to interrupt you, but could you get a little closer to the mic because it's really kind of echoing on our end.
Yeah,
So,
hold
sorry.
on just a sec. Let me
Yep.
take out my headphones
Yeah,
and do
that'd
it
be better
old
because it's
school.
it's kind of making it hard for us to hear. But really keen to hear what you got to say. Kramer, you're up here, so you're gonna have to. Peter's a really smart guy, Kramer. So you're gonna have to ask some questions to get in here. We're just gonna go right to Q&A. So, yeah, we see we got Infra in here, Brendan, Howard, just going down the list, all the usual suspects. This is great.
Okay,
Oh,
are we good on the sound?
that's
So
much
much
better.
better.
Thank you,
Okay,
Peter.
good.
Thank you.
Okay,
Yeah.
perfect. Yep.
Yeah, go ahead.
All right.
So,
So anyway, right, the recession odds were like 52% before the election. They plunged right after the election. They got down to 17%. That's the odds of recession in 2025. They got down to 17% before Trump took office. And, at that point, he was basically saying all the right things. He was talking deregulation. He was talking about getting rid of the income tax, which was my personal favorite. He talked about it on the Joe Rogan show back in July. He kept talking about it over and over. Once he took office, the odds started creeping up, mainly because of the tariff war. And so the odds got up to about 66% about a week into the tariff war. So that was like April 9th. April 2nd was Liberation Day. And then once Trump, started kind of issuing pardons in the tariff war, they've been coming down. Now they're back down to 31%. Now, if you zoom out, the Trump agenda, it's kind of the standard pro-growth agenda, aside from the trade stuff. So, it's the same recipe that Ronald Reagan had, which is tax cuts, deregulation, let the private sector soar. You could do some other things like tort reform, permitting in infrastructure in general, but especially in energy. All those things are very good for growth. I think the mainstream media really, really wants Trump to screw up. They've, kind of got a story to sell. And so they were really excited about the tariffs, right? So, right in about a 2 week period there, we had stocks collapsing, price of everything was going down, gold and Bitcoin, of course, were going up. And then he had that GDP print for Q1 that, I mean, the media was just orgasmic over that because it's been a while since we had that. I think it was back until when Joe Biden had his recession. Remember, that was not a recession because they redefined recession back in, what was it, 22. So it had been a while since we had negative print on GDP. So we're really excited about that. But of course, what was happening there, a little bit of the negative was government spending actually came down last quarter, shockingly. And that automatically subtracts from GDP. Even though it makes us wealthier, it's a good thing, but it shows up as GDP because every dollar government wastes is, of course, counted by government statisticians as GDP. But the big driver on that negative print was the trade war. So companies were front running imports. They were bringing stuff in ahead of the tariffs, and imports mechanically subtract from GDP. The bean counters don't worry about it because when the stuff is sold, it then gets counted as GDP. So in their mind, they're just like canceling it out. But what it does mean is that when you have a big rush of imports like that, it shows up as negative GDP. So now where we are is that the import stuff is evening back out. So the Fed's looking at what the GDP now forecast from the Atlanta Fed is now they're saying that currently we're running 4.6% GDP growth, which would be the fastest since 2021. Meanwhile, you've got the income soaring. That was last month. Real incomes went up 0.8%, which is a 10% annualized rate. That is off the charts. That's the kind of thing that China used to do back in the good old days. You've got inflation that's now running 0.1% a month. That's 1.2 annualized. That's below the Fed's target. And interestingly, in a normal Fed, they would be talking about rate cuts at this point, or because where interest rates are right now compared to the past couple of decades, they're relatively high. So at this stage, the Fed would, start to make whisper sweet nothings about rate cuts, and especially given the trade war, because the Fed for about 100 years now, every time Washington does anything weird, the Fed steps in and tries to bail them out. So there's a kind of a funny dynamic now where the Fed's sitting on its hands, even though since Trump came into office, inflation has averaged, I think, around about 1.4%. So, the election, one of the top issues in the election was inflation, the other one was immigration. Trump has delivered on that, I think, a lot faster than I expect. I didn't think he was going to cut inflation in half, in 2-3 months. But anyway, when you boil out the numbers, the jobs are doing great, inflation's doing great, GDP is doing great. The only people who are sad, I think, right now are mainstream media and, of course, bears.
Right. So let's tease that out a little bit. So, the old baseball adage, can't remember if it was Yogi Bear, whoever, lies, damn lies, statistics. So
Yeah.
one always has to be careful to annualize stuff that's extremely short term. And, as you rightly pointed out, the first quarter GDP was depressed because of the trade numbers, and then again, it flips back in the
Yep.
second quarter, blah, 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 blah. There's also so much uncertainty out there right now. You could see how, I could make all kinds of arguments, companies maybe don't want to really, maybe they hold their spending plans. So it's a deterrent to GDP. And once you get clarity, that'll be good for the economy. On the other hand,
Yep.
you talk about labor. Some people are saying no one really wants to make the layoffs because they're not sure they'll be able to get the labor back. Yada yada yada. So I guess what it all boils down to, Peter, how do you think about? I mean, the way you portray it, it sounds great, but how do you think about trying to like smooth out some of this? Because again, I can annualize anything, you can annualize anything, and you can make it look good. So if you try to look out, say over the next 6-12 months, forget about taking this quarter annualized. How do you think about all that? Like for instance, if we get tariffs, no one knows exactly what's going to happen. Let's just say it's 10% across the board, and I don't know what's going to happen in the end. But how do you think about that in terms of what it does to spending power? It's effectively a tax cut, blah blah blah. So looking ahead, how do you think about the next 6 to 12 months?
Yeah, so you got a lot of moving parts. The annualized, you kind of have to do that right now because we're talking about what, like Trump's been in office for 4 months, and so if we do year on year, then you're sort of talking about two completely different economic
Sure.
regimes. In terms of investor expectations, the expectations of companies building investments, as you know. The biggest disconnect, I think, right now is between the soft data and the hard data. So the soft data is the survey-based data, things like consumer confidence, and the hard data is the actual numbers that come in. And soft data actually does not predict very well.
Correct.
You could argue it's kind of a mystery why anybody
Yep.
even pays attention to it.
Yep.
But anyway, the sort of thinking there is that soft data, because it's expectations, is looking at the future, right? So that's our crystal ball, and then the hard data is our past. But given the predictability, that's not exactly accurate. The funny thing is this: so University of Michigan is one of the main soft surveys, and they asked people, "What do you think inflation is going to do next?" And they had, I can't remember the exact numbers, but once the election passed, right, the inflation expectations, like before the election, it was it was something high. It was like 4 or 5% or something. You may know these numbers better. Anyway, after the election, like on a dime, Republicans go to like 0 to 1% inflation is what they expect, and Democrats go to like 7 or 8%. All right, so people are living in completely different worlds.
Right.
Now, if you average them out, then the question, there's a zero bound on expectations. And so, if you average them out and just take the middle, then you're going to end up, getting a big jump. But fundamentally, when you get data like that, that is garbage. Right? You can't do anything with that.
Right.
I mean, clearly half the country, is not sort of their sober assessment that 12 hours after the election, inflation is going to go 7%. What's really happening is they hate Trump. And then the other half of the country, of course, they love Trump.
Right.
So a lot of the soft data, I mean, like right now, the soft data has been just atrocious. During the trade war, it was really awful. But, normally the media, they talk about a lot of different stories. During the trade war, that was just hogging up all the oxygen in the room. And that's all they wanted to talk about is how Trump was going to destroy the entire world. So how much of that is coming out of the media stories? We don't know. Now, in terms of what's coming next, so we got a lot of moving parts, right? We've got the government spending, which was a big contributor to inflation over the past couple of years. That was the COVID spending orgy. They ramped up government spending from about 5 trillion a year to 7. And the pattern throughout any crisis in America is that they'll use the crisis as an excuse to get more power, more budget, and then they'll use that to create agencies and all these different constituencies. They'll always slice off a chunk for Republican congressmen so that they can basically bake it in for good. They set up some I don't know, disinformation office in Alabama so they can count on their vote. Anyway, by the time you're done with it, once the crisis passes, that metastasization of the spending means that you only get about half of it back.
Right.
And it's true in every war. There's a book about this by Bob Higgs called Crisis and Leviathan. So every crisis grows the Leviathan. And that's exactly what's happening in COVID. So I think we're back to about 6 trillion at this point. So in other words, we went from 5 back in 2019. COVID took us to 7, and now they kept half. Right? They always keep half as a commission. That's their bonus for having given us the crisis in the first place. And there was a lot of hope with Doge. Elon obviously was very committed to it. Trump, this is a story that I think doesn't get enough attention. In Trump's first term, every budget he proposed up until COVID, everybody went crazy in COVID, but every budget he proposed up until COVID, he tried to cut something like 100 or 200 billion every year. I mean, he just took a machete, especially to discretionary spending. He was trying to cut spending. Congress never went with it, but there's this kind of narrative running around that Trump is Reagan. In other words, he talked big about shrinking government, but he actually increased spending. In his first term, Trump did not do that at all. He was absolutely trying to cut spending. It was Mr. Smith comes to Washington. He thought they were wasting too much. Now he doesn't seem to be doing that right now. He's out there pimping the big beautiful bill, and I think what's happening is that he is sort of coming up against reality that he needs Congress to actually support things. Congress, sadly, is dominated by rhinos. One of my pet peeves, like when we talk about the big beautiful bill, and you read about it in even in like the Wall Street Journal, it's not that left wing. And they'll talk about the moderates, the spending moderates, and then they'll talk about the extremists. So for them, the extremists are the guys who want to cut spending. The moderates are the guys who want to keep spending like drunk sailors. The thing is, that ain't the base, right? The Republican base is like 80, 90%. They want to burn the whole thing down. They want to slash federal spending by like trillions. Okay. So if the entire base, in other words, their voters, want them to slash spending by 2 trillion a year, the moderates here are like Massey and Roy and Rand Paul. Okay, the extremists, the pro-government, big government extremists, are the rhinos. But unfortunately, the vast majority of Republicans are rhinos. They do not give a crap what the voters wanted, who put them there in the first place. And the transmission mechanism, right? The way to punish those guys and remove them from office, it's a long and winding road, right? You got to get through the primary. If you try to put some guy in the primary, they're going to go after him. They're going to, try to find anything embarrassing they can. They got a whole industry, opposition research. So it's very, very hard to replace these guys. And so when you put that together, even though Trump, I think as a person, wants to cut spending, he doesn't like Washington. He wants it to be smaller. He wants to get rid of the junk. That's why he and Elon got along so well. But he's got to work with rhinos. He's got to get their votes on other stuff. And he's got to hold on to Congress, right? if he manages to kneecap the rhinos, then we're going to see exactly what happened after the 2008 Tea Party, which is that you got a bunch of guys who've never been in politics. They don't, watch their words. They said something weird on social media 8 years ago. These guys are going to get slaughtered in the general. The Democrats are going to pick up the House for sure. And at that point, Trump gets to have 2 years of being investigated for every BS. God, what was the thing? Anyway, like every little thing he does, right? They're going to go after him. They're going to open hearings. That was it. The Signal chat. And they actually wanted to open hearings on it like it was Watergate, right? So Trump has to hold the House. He can't kneecap the rhinos. He's got to work with them. So unfortunately, that gives us the big beautiful bill, which is looking at something like 5 to 6 trillion in additional debt over the previous baseline. And that would take us to something like 28 trillion. These are CBO numbers. 28 trillion of additional debt over the next 10 years, which is a deficit of averaging nearly 3 trillion a year.
Right. So, Peter, very well said. So let's roll with that. So instead of worrying about recession, and many people have been talking about fiscal dominance, and as long as you keep spending like this, odds of recession are pretty low. And now there's a movement afoot. There's impetus finally, given the release of the debt brake in Europe. The Germans are going to spend more. The Chinese are making noise about spending more. So everyone's spending more. There's no austerity going on. All right. So let's roll this the other way. Let's say, okay, no recession. Let's talk about not so much inflation, but more bond yields. It's two things. We got to talk about, real rates, term premium, all that kind of stuff. So it just kind of seems to me, just being contrarian and being Machiavellian about the whole thing, politicians don't always get what they want. And, what are the odds that it's not a perfect analogy, but people often say, hey, we'll get a Liz Truss moment here, whatever, that the bond market just says no. And what I kind of wonder is, you got the 10-year at 445 or wherever we are today, and that's with, we're still dealing with this tariff stuff, and some people are still worried about a recession. The dollar's falling, blah blah blah. I mean, what do you think about bond yields going meaningfully higher from here, Peter?
Yeah, I mean that's been the big question, and a lot of people are looking at bonds like a hawk. They haven't moved that much. I think we're looking at about maybe a 0.3% move since Trump took office. That's not that big considering the pure, unadulterated chaos that he's unleashed upon the economy,
Hmm.
coming from every angle. So it hasn't been that much yet. The tricky thing with a financial crisis, Ray Dalio's been warning about it. He said that he said we have to keep an eye on it, but what he's getting at is that there might be some kind of financial crisis. The diamond, right? He was
Yeah,
also talking
well,
about that last week.
Peter, let me ask you this. I don't really care what Ray Dalio says. I look at it. I've been investing in farm markets since the early '80s, my days at Fidelity. All right, and
Yep.
if I was looking at I mean, if you had something like the U.S. where the currency's weak, you got a fiscal problem, blah blah blah, and it's not that weak yet, but it could, things where they say risk happens slower than suddenly whatever. You'd probably say, if the IMF or the World Bank were called in, you'd say, hey, you know what? Pursue some austerity, raise interest rates, blah, blah, blah. We got exactly the opposite going on here. You're like, there's no
Right.
austerity whatsoever. And we have, a president who, has been browbeating the Fed to cut rates and so on and so forth. And so, there's been 25, 30 trillion of capital that's flown in here. We've sucked all the capital out of the rest of the world the last 10, 15 years. And, from a foreigner looking at what's happening to my dollar denominated assets, and worse, forget about what the administration says today. The odds that it'll change tomorrow or a year from now or whatever, it's like money go home. So to me, this is all the risk on the upside for yields going up. Like if I was a foreign investor, like unless I was brain dead, like I'd pull all my money out of here in a heartbeat. This is, and by the way, I don't want to make this political because I want to stay in the economic realm of this because a lot of people get tricked. You know how it is, Peter. Pete, you're either on one side, the other side, whatever. But I just look at, I think you're sowing the seeds of a. And by the way, the Trump administration probably wants a lower dollar. Forget about the open mouth operations they engage in on TV sometimes. So I'm kind of looking at this saying, hey, wait a second. We have a big funding gap here, and as the saying goes, Peter, never depend on the kindness of strangers. And I just kind of, it's the old adage, Michael Kramer, who's to your right, coined the phrase 2 months ago. Trump does not hold all the cards. Mr. Market holds all the cards. And in this particular case, it's James Bond, who holds all the cards. So, I don't really care about Ray Dalio. I can't remember the last time he was right on anything. All right. And so let's not talk about him. That's an appeal to authority, logical fallacy, not allowed in this space. Okay. I'm talking to you. Okay. That's my opinion. I'd like to know what you think.
Yeah, right. So no, I don't particularly pay attention to Ray Dalio's opinions on it. But the point is that you've got chatter about financial crisis, and we've had that since like 1970.
Sure.
People have been predicting that, the dollar was going to collapse and bond markets are going to explode. And the only real financial crisis that we've had out of 55 years of Dalio or Diamond style warnings, the only time we've come close was 2008. And that was not the dollar.
Right.
That was, fraudulent loans
Yep.
on real estate.
Yep.
So we, 55 years now, we've been waiting for the crisis. Now, you could argue it's been coming in slow motion. Right. So if you look at gold prices, for example, Bitcoin being a hyper concentrated version of gold, if you look at gold prices, I mean, they have been absolutely on fire. I think at this point, since 1970, gold has actually beat stocks, which is pretty astounding considering
Yep.
it has no yield.
Yep.
So yeah, it's happening in slow motion. The trick is, if you're predicting something for 55 years and it doesn't
Sure.
happen, like unless you're Peter Schiff at some point, you want to ask,
Hey, Peter,
like,
you're not Peter Schiff, but I resemble that remark. I'm sorry. Okay, that's a low blow, dude. That is a low blow. Go on, keep going, Peter. Go ahead.
well, I'm not even going to bring up his
I
opinion
know,
on
I know,
Bitcoin.
but
All right,
Peter,
so
Peter, in all seriousness, because you don't engage in
yeah,
hyperbole, and I try not to, but forget about calling the end of the world. I'm just like if we step back and we say, okay, like what should we do with our money? Stocks,
yeah,
bonds, cash, whatever. And like the stock market hasn't really. And maybe you say, well, it's because yields haven't gone up all that much so far, but yields were 450, and then they went to 360, and now they're back at 450. So,
yeah,
let's see how the cards are dealt out. But so what I'm getting at though is I'm not asking the end of the world. I'm kind of like, okay, if I'm an investor and if I think that bond yields are going to go up from here, at what point, how does that impact the stock market? And at what point? That's really what's behind my
yeah,
question. That, so far it hasn't really been much of a problem for equities, but I suspect at some point it will be if we, just say $50 in double jeopardy. Let's not talk Weimar here, okay? Let's just
yeah,
say the 10-year goes to, I don't know, 5.25, up 75 bips from here. Which, if
yeah,
you look at all the smart guys and Michael Howells and all these other folks, they talk about term premium and too much. We've borrowed a lot at the short end, not the long end, and blah blah blah. There has been implicitly a form of yield suppression, but whatever. Let's just say yields go up. All right, 5.25. I'm just throwing that thought experiment. Okay,
yeah.
what's the likelihood that would happen, and then what do you think that does to equities?
Yeah, well, it's if you look back historically, a move like that is not going to crash things. I think the problem is that, you mentioned Liz Truss earlier, and what happened in the UK. What was it, 2 years
Yep.
ago? And that so again, right, in the UK, 55 years people predicted
Sure.
crisis and it never happened, but boom, it came out of the blue, right?
Right.
It was a lightning bolt
Yep.
out of the blue. So I think that's the concern, is that if we look at the trends, clearly everything is getting worse, right? It has never been this bad. If we trace back to Richard Nixon breaking gold, or breaking the dollar rather, it has never been this bad. Debt has never been this big. The fiscal deficit at this point is 6.7% of GDP in peacetime. I mean, this is relative peacetime for the United
Sure.
States. So and if a recession were to hit, if we look back historically, the last couple of recessions, based on what happened to the deficit in each of those recessions, going back to say the 1980s, we'd be looking at like a $4.5–5 trillion deficit. I mean, it's really truly a shocking
Right.
number. So, how many bricks can you pile on the camel's back? On the one hand, you say 55 years, you guys have been wrong. On the other hand, you say, well, talk about the UK, right? There was no warning
Sure.
signs in the UK. The UK was the exact same situation. It was one more brick on the camel's back, one more brick. 55 years we've been doing it. We can keep doing it. And then boom, it popped. And, something you mentioned earlier about the foreign holdings in the US. So net foreign holdings in the U.S. are north of 30 trillion.
Yes.
I mean, it's really an enormous number. I think that was really a big reason why stocks moved so hard on the trade war. And the reason that's interesting is that we've got two kind of interesting cases in front of us right now in terms of sovereign default. One of them is Greece in 2012. It was I think the title of this space is here was Greece versus Japan. Greece in 2012, they had a national debt round about the same as the U.S. right now, something like 130% of GDP, and they had the amount of interest payments going from the Greek government going out on those. It was actually lower than the interest payments at the time for U.S. debt. Okay, so it was not a large debt load relative to the U.S. Or put differently, it's somewhere where we already are now. Now, Japan, on the other hand, Japan currently has about twice that in debt. It's got about 260% of GDP in debt. In U.S. terms, that's something like 65 trillion plus in debt. I mean, they're absolutely swimming in debt. They are not in crisis. So, what's the difference between the two? Well, $8 and $10 of Greek foreign debt was held by foreigners. Right, foreigners, they have no loyalty, they have no sort of institutional pressures or regulatory pressure to hold the government's debt. You know, if you're like a German bank, you know, you don't care about the Greek debt. You're perfectly happy to sell it and go buy something else if you think it's better risk reward. Japan, on the other hand, 90% of the debt is domestic. Uh, Over half the debt is actually held by the Bank of Japan, so that's purely inflationary. And then a big chunk of what's left is held by pensions, insurance companies, banks, and they have, you know, various incentives, whether they're regulatory, how they account for you know, government holdings versus other types of holdings, how they score those on risk. They have various incentives to hold them. So the end result is that Japan can do just fine because almost all of that capital is kind of captive. Now, the US is somewhere in between, but I think the biggest vulnerability in the US is that I don't know the exact percent, but a huge proportion of stocks, I think something like between a third and two-thirds, are held by foreigners. That's going to be very, very footloose capital. We saw that during the trade war. Bond vigilantes also, to the extent that those are foreigners, you know, they're not
Right.
going to stick around to watch the show. They're going to move
Yeah.
pretty fast.
But by the way, I think the numbers are a little bit lower, but your point stands. The point
Yeah.
of it is foreigners own over 30 trillion in assets, and you know it's a giant carry trade. And you know the last umpteen years you had the so-called American exceptionalism. You know, aside from these unique companies with moats and strong balance sheets and cash flows, you also had the benefit of a tailwind of a rising dollar. Now the tide's going out, the tailwind's become a headwind, and a couple of companies started to get called into question as to whether they're so exceptional after all. But I think for
Yep.
me, the real U.S. exceptionalism, when people talk about it, I like to think about the financial profligacy that we've experienced. That's what's been really exceptional. It's spending such huge deficits, and as you were pointing out, Peter, you depend on the kindness of strangers. I mean, it really depends. It's one thing if you owe yourself the money, like the Japanese or the Greeks. And then by the way, a good friend of the show's was in here. He's Greek. He was in here a few weeks ago, and we actually talked about the title of the room was something about Greece versus America. Compare and contrast or whatever. And the Greeks had to take a lot of pain and suffering, and we've tried. There's a law against recessions in this country. There's no appetite for taking pain, and so I kind of wonder if Mr. Market is going to have to have his way with policymakers, because last time I checked, there isn't really a big constituency in D.C. for cutting spending. But anyway, I'm talking too much. I'd like to move this along. I know you've got a 6 o'clock hard stop, Peter, and we got some smart cookies in the room. I'd like to first go to Michael Kramer, and then after Michael Kramer, we're going to go to Infra. Michael, good to see you. What's on your mind? You have a question for Peter?
Hey, George. Thanks. Peter, great listening to you. So, um, the one question I guess I have for you, you were talking a little about inflation, and I didn't know if you had a view on it in terms of where it goes from here. I mean, I keep looking at some of the prices paid indexes from various, soft data surveys like with the Fed and even the ISM. And I'm wondering like how, if that's at what point do those data points show up, or do you think that's just more, soft data noise?
Yeah, I mean, the main number that I look at is just M2. So that's going to capture both, Fed money printing and pyramiding from commercial banks. Currently, from Q1 or from Q4 24 to Q1 25, we've got about 4.7% annualized on M2. That is comparable to like 2014-15. I mean, that's a pretty low rate. Back then, inflation was bumping somewhere around 1%. That was in the wake of the financial crisis when everything was recovering. We had a real slow economy back then. So, maybe some of that was government spending coming back in. Maybe some of it was loan creation being subdued. Maybe because of regime uncertainty. They're not sure what kind of policies are coming next. But for me, that's kind of the key number that I look at. If M2 comes back up towards 6 or 8%, then I think that we could have inflation back. But I should note, like, I didn't think it would come down this fast. I thought that we would have more of an overhang from Biden, and so I mean I've been surprised by it. But yeah, so far M2 is pretty subdued.
Okay, so I mean, you're not looking at these data points, or you're not. Do they not factor in, or because I mean, some of them are running like at 22 type numbers, and so that's why I'm kind of eagerly waiting to see whether or not it shows up. Because even if you look at some of the shorter dated inflation swap data points, they're pointing towards higher inflation rates coming as well. So you're just strictly sort of coming with that view from the measure of M2 then.
Yeah, on inflation, generally I do top down. So I mean, yes, you could have transitory things, tariffs, no doubt. Things like energy, but fundamental. Sort of coming from an Austrian background. If say the energy gets more expensive, then that's just going to pull from other things. It's going to pull purchasing power from other things that are going to then go down, squeezing the balloon. And so, I mean, in terms of aggregate, I don't. I mean, kind of. I don't necessarily gamble on month to month, and so I don't pay a lot of attention to that. It's more the trend, and on the trend, I constantly go back to M2. Like if the number. So for example, right now we're at 1.2. That is pretty consistent with what M2 growth is. So I've no doubt there's idiosyncratic things, especially with the tariffs. But in terms of what would we expect inflation to look like for the next 6 months, is there some kind of like hidden trap in there that it's actually bumping along at 8%, but we just can't see it yet because I don't know, debt deflation or something. In terms of that, going to the M2, that kind of reassures me whether the numbers we're seeing now seem real.
Thanks, Michael. Let's keep it moving here. Infra, good to see you. What's on your mind? You got a question for Peter, Infra?
Yeah, I'm curious. So in the Liz Truss moment, by my understanding, the mini budget she proposed was going to increase the deficit by about 2% of GDP. If you look at the budget as written, that before any revisions in the Senate, it'll raise our deficit by about 1% of GDP. Like how much is the Senate going to actually be? You're clearly more politically intelligent than I am. I have no clue. Like, is the Senate? Are they going to actually be able to rein this in? Because as it's currently written, it's pretty insane in terms of the profligacy. And I don't see how bond yields don't go significantly higher. The curve steepen notably even from here, and term premium expand even from here. So like, do you? I just don't see how the two can be reconciled. Either the Senate makes major cuts, or the bond market forces their hand. I don't see how all that plays out otherwise.
Yeah, I don't think the Senate is going to do much of anything. Most of the fiscal impact from it is continuing the Trump tax cuts. And those have been around so long at this point that they're kind of baked into everything, right? They're baked into corporate investment decisions. They kind of always had to continue. We were looking at a fiscal cliff, and so those certainly the Senate's not going to get rid of those. I think the trick is that what was supposed to happen was that they were supposed to make cuts to other things, both discretionary, including military. Discretionary means like the regular spending, like the EPA and highways and whatnot, as well as so-called mandatory spending, which is things like Medicaid and Social Security. So what they were supposed to do is to cut all that stuff, get out the fraud and the waste and the political crap, to make room to continue those tax cuts, because the tax cuts at this point have been in for almost 10 years. Getting rid of those would have been really disruptive. And obviously, the Republicans are not going to, deliver an effective $4 trillion tax hike. They don't want to cut anything. Even what the Senate's talking about would be window dressing. So I don't think that that's going to change. I think, your final point there that bond vigilantes are going to ride again. I think that's, in a way, that's kind of the best outcome. is that we get sort of a little taste of crisis to concentrate some minds in DC, because DC is acting like everything is perfectly fine. And that's kind of the incentives. Hans Hermann Hoppe, who's a great Austrian economist, he talks about, he's a huge fan of monarchy because he says that monarchy looks at the long run, democracies look at the very, very short run. And this is especially true in the House of Representatives. These guys have like a 2 year, right? They have a 2 year term, which means that on any given moment, their horizon is like the next 6 months. And so they are effectively, like, the rest of history does not exist for them, right? They are going to do whatever benefits them the most in the next 6 months or 1 year. And in this current context, that is 100% kick the can.
Yeah, Peter. Before we go to Rusty, I mean, I'm reminded I've used this line in this room a bunch of times already, and it came from an old strategist I remember from back in the '80s, Andrew Smithers, and I don't know where he stole it from, but it was the line. It goes something like, without action, there's crisis. Without crisis, there's no action.
Yeah.
So, for instance, there's no action, we're going to have a crisis, like the Holy Trilogy. It's so like,
Yep.
it's like you said, the best out. Mr. Market, the Mr. Market holds all the cards. Mr. Market has to be the adult in the room. So, I got more questions for you, but I want to keep it moving. Rusty, good to see you. You got a question for Peter? Rusty, please unmute yourself.
Yeah, thanks, George. Appreciate it. Hey, Peter. It's great to hear everything you said. Love your stuff. But I was gonna pick your brain on the population question. Really, just in general, because I know when Stavros was speaking, about Greece, that was kind of a thing too. And I know we have it in America and Japan. Just your thoughts, if you could speak on that.
In terms of
Just the
population
aging
falling.
population, and yeah.
Yeah, I mean, aging population is a wonderful thing, right? People are living longer. Falling population is a problem, and that's actually a pattern going back thousands of years. So you can go back to Song Dynasty China in 900, and people were worried that women weren't having enough kids. The Roman Empire, people stopped having kids. Just throughout history, whenever people get prosperous, they stop having kids. And I think a big reason for that is that kids are the pensions. Right. So when you're in a survival situation, you need kids because otherwise you're going to starve to death once you get old. And that's when sort of nature's, fertility plan is to force us to have kids to take care of us in old age. That breaks generally whenever you get prosperity. Now, if you pair that today with government provided pensions, where not only do you not need kids, you don't actually even need to save money. The government will just take care of you. They at least give you a universal basic income when you get old. So pensions, I think, are a big driver of it. The other one, frankly, is women working. There's almost a one-to-one line that when women get jobs, they stop having kids. Changing either of those is politically impossible. If you argue for getting rid of all pensions unless people have kids, you could maybe put some pressure culturally, to highlight the joys of motherhood and the joys of the kind of 1950s deal where the guy goes to work and the wife stays home. By the way, it doesn't work the other way around. Like Mr. Dad doesn't work. So it may sound good, but that doesn't work. So given that those are not politically going to happen, in terms of like a quick fix to the fertility rate, you can tweak things around the edge. Hungary, for example, they said, I think if you have 3 kids, as a woman, you don't pay income tax for the rest of your life. So you can definitely do things like that. There have been various countries that tried baby bonuses. Japan, Sweden tried them. They have almost no impact. Maybe they're not big enough. Maybe, there's eventually, like, if you give every woman $1 million, she'll no doubt have kids. There's probably some price on that, but it's difficult. I guess the good news is that if we do get a crisis, then historically the birth rate soars again because you need them to survive.
Hey, Infra, you got to follow up.
Yeah. Well, just speaking as a young person, I can say that me and the other young people I know that who all hold director level positions and make 6 figures, we all want kids, but we're not having kids because we can't afford to live. We can't even barely
Yeah.
afford to rent, let alone buy a house, right? And so I've been doing a lot of work on that kind of the silent depression concept of the past 20 years being subpar wage growth and overall aggregate growth. Do you see? Do you think that the Trump administration is serious about real populism, real wage gains for the bottom 90% in real purchasing power terms actually reindustrializing?
I think he is. Oh, okay, so he's without a doubt interested in raising income for blue collars, for lower middle income. I think he's very, very interested in those. To an extent comparable to Bernie Sanders or whomever. He's been pushing no tax on tips over time. These are things that are overwhelmingly blue collar. He floated a couple weeks ago raising taxes on rich people, and of course, Republicans in Congress crap the brick. But I think he doesn't particularly like rich people. He loves blue collars. There's a lot of people who've sort of psychologically tried to tease out why that is. Maybe it was his upbringing, hanging out with workers on construction sites and things like this. But anyway, for that, I think he wants to do everything he can to help the little guy, blue collars. The next question is reindustrialization. So that was kind of the big question when he first started with the trade war. Was that is he just doing this as leverage so that everybody can drop their trade barriers and we have a free trade utopia, or is he genuinely trying to reindustrialize America? A lot of the stuff he's done since then, number one, I think that he is at this point actually trying to reindustrialize America. I think there's some good news on that, which is that you could, if that's your genuine goal, then it's going to force you to improve the business environment in America, right? A big reason why stuff is not made in America, it's not because China stole it, it's because it is so difficult to run a business in this country. Like somebody who would set up a manufacturing business in America, you have got to be a masochist. All the crap you got to put up with, the green policies, the DEI, it's just endless. The threat of lawsuits. So improving the business environment is the only way that you're going to reindustrialize America. So in that sense, I wish him well. I want him to remain interested in that. Another point on that is, and this also surprised me, the amount of foreign investment that has flooded into the U.S. since the trade war has been epic. So they've got about $5 trillion in announced deals. Trump is saying that he's got about 8 trillion. He's got another 3 in his pocket. For perspective, before COVID, the entire US economy had 4 trillion in investment for the entire 300 million people. And according to Trump, he has doubled, possibly tripled that in 4 months. And the reason is because all these companies are trying to get inside the big, beautiful tariff umbrella. So there's a recent survey said that 90% of American companies are trying to reshore at least some production, bring it home. So I did not, I thought it would be a long road to reindustrialization because you have to fix those sort of business environment factors. In fact, I've been surprised how much money has been flooding in. And that kind of goes to the whole taco burrito thing where, you know, I don't know if Trump is playing 3D chess. I know, George, you don't want
No,
to talk
no,
about this.
Peter, it's 8D
No, no,
chess.
no,
No,
no, no.
Peter, it's
It's a
8D
valid
chess. Get
point.
it straight. It's 8D
All right.
chess.
So there's been this debate. Is Trump paying, so he keeps changing the tariffs, right? He puts out 50%, and he's like, nah, 10%, nah, 125%. Every Tuesday it changes. And the question has been, is that 3D chess or is it, checkers for morons? Because the result of
Checkers
that,
for morons. I love that. Rusty,
because
you got to tweet that out. I'm sorry, Peter.
I
You're
am. I've
cracking
already
me up.
started. I've
Hey,
already.
go on. Checkers for morons, Peter. You write your own copy. You're good, dude. Keep going.
all right, because the trick is, if you're going to keep changing tariffs every Tuesday, then countries are not going to make a deal with you. Right, because all right, look at it from the perspective of Japan. If Japan sits down, so Japan very much wants a trade deal because exports to the U.S. are existential for their economy, right? But the thing is, if Trump makes a deal with Trump, if Japan makes a deal with Trump, Japan has to stick with it because it's got a reputation to protect to protect in the future, right? If Japan makes a deal and then 3 weeks later it decides it's going to do something else, it's going to be more difficult for them to make deals in the future. So they have to behave like adults. Trump already has a hell of a reputation, right? Everybody knows that he flips on a dime. And so he's free to behave however he wants. So the result is that if you put this pure chaos on the tariff rates, other countries cannot negotiate with you. So there's a game called Chickens, popular in the 1950s. Two guys, they drive at each other with cars. Whoever turns first loses. He's the wimp, right? And the way to win that game is that you take your steering wheel off and you hold it out the window and you wave it, right? You tell the guy, I cannot turn, so you better turn. So that's the question. Is it Game of Chicken 3D chess or is it something else?
Oy. All right, Peter, you're on fire. All right, I want to go to Robert for a follow up, and then Lauren. Robert, take it away.
Yeah, so my family's had a domestic US based manufacturing company for 70 or 80 years. We have, 200 sales reps for America. We have one for international. And the reason for that is that the dollar is still, even with the pullback, grossly overvalued. That especially compared to something like the yuan cross, where the yuan is far too weak given their
Yeah.
record current account surplus. So like we have this dynamic where these current account surplus countries are the currency is the issue. So like what is the likelihood, if you had to give a percent on this kind of Mar-a-Lago Accord currency reordering?
Yeah, I think Trump is a lot more focused on that than any president since Plaza Accord since 1986. He and JD Vance have both criticized the dollar as being too strong, which is pretty rare for a Republican. Usually, Republicans are rah rah for the dollar. And of course, what they have in mind is that it would promote exports if we had a weaker dollar. It would also, it would make Americans poorer. It would make resources that we import more expensive and so on. So it's kind of a mixed bag for the economy. But Trump has absolutely been interested in that. He incorporated it on his Liberation Day tariffs. Remember, he had that goofy equation where he estimated that like Japan had deserved the 26% tariff. When they talked about building that equation where they were going to determine the tariffs on everybody, they talked about currency devaluation. The end result didn't include it at all. But as you say, most of the Asian countries, for example, their currencies are between 40 and I think Malaysia is like 60%, at least until recently. Generally, they're about half what they should be because the governments go in and actively buy dollars and sell their own currency to try to weaken them. So Trump is focused on that. It kind of falls into the bigger picture on tariffs, where he, no doubt, there's a lot of things that one could trade back and forth. He seems to be interested in using that as a tool, and so will he be successful with that? That kind of goes back to the fundamental question of will he cut any freaking trade deals? He hasn't cut any, right? It's been what 2 months now
Yep.
with the trade war. So given that, he may not come out with like a Mar-a-Lago Accord voluntarily. What he could do, on the other hand, is at least not lift a finger to try to protect the dollar. Um, well, yeah, we can get into the dollar with the killing off Gaddafi and all that stuff, trying to protect the dollar. But fundamentally, it's been a long time since the U.S. government has actually tried to protect a strong dollar, and Trump seems uniquely interested in weakening it.
Cool. All right, let's keep going here. And Peter, I see we're 5 minutes before the hour, so I want to keep it moving here. We can go to Lauren McDonald, and then Joe, and then Rusty for a follow up. Lauren, welcome. Please unmute yourself. Do you have a question for Peter?
Hi there. How are you? Nice to chat with everyone. Hi, Peter. My name is Lauren McDonald. I've been a headhunter for over 30 years. My question to you, and thanks, I follow you religiously, so thanks for taking my call. Why do you think there's almost a blackout in mainstream economic reporting on how brutal the job search is right now for people over 150,000? I work with this group. I work with people over 150. Many of these people are unemployed for 6 to 12 months before they come to me. They're top performers, the greatest resumes. They're good people. They're not, a problem. Yet, this is not, there's nothing in the media about the layoffs, and they're actually changing the numbers of what they're actually laying off to be much less. I was curious what your thoughts were.
Since when has that been a factor?
I would say probably it's been going for a long time, but I would say it's pretty heavy over the last 2 years. It seems like it's getting worse and worse every day because I know what the numbers are because I am a pretty big presence on LinkedIn and they're not showing it there. I think they just said Microsoft laid off 6,000 people. It's closer to about 60,000. And I was
Yeah,
just
I mean,
wondering why.
So let me just jump in, Lauren. Let me just pile on your questions, put it a different way. And Peter, I think it's a very good question. I think it relates to something drive by mentioned early on when we started about how and we had that maybe some companies are actually holding on to labor because they're not quite sure. It's it was hard to attract and retain labor previously, but what Lauren was referring to, I've heard quite a lot as well about the what sort of white collar recession that started. I mean, coders, for computers, oh, it's a disaster because of
Yeah.
AI. You go down the list, our industry, financial services, not doing so great. I mean, there's a
It's
lot of
across the board.
yeah,
It's across the
there's a
board.
lot of fraying around the edges, Peter. I think that's what she's getting at. Any thoughts to that?
Yeah, I mean, there are two, I think, big things that have disrupted the labor market recently. Okay, so zooming out, the labor market is relatively healthy, right? It's 4.2% unemployment. There have been a bunch of people who had dropped out of the sidelines. About 3 million people dropped out of the workforce during COVID. A lot of them retired early or they went on government benefits. A lot of them are coming back in. So, sort of, big picture, 8,000 view, the labor market is healthy. Now, having said that, there are two big caveats in there. One of them, just anecdotally, what I've heard is that immigration is a factor, that a lot of people have trouble finding jobs because companies import H-1Bs at cut rates. The H-1B program, I think originally it was supposed to be inflation adjusted, something like 90 or 150,000. In other words, they had to be high skilled workers. They didn't adjust that over time with inflation, and so now that's you can pretty much get anybody. So that's one factor is immigration. The other, I think, is what happened during COVID. So the tech industry specifically expanded massively during COVID because there was so much more demand, right?
Right, right, of
Yeah,
course.
yeah.
Yeah.
You had remote work. You had a lot more demand for online services. People were watching TikTok. And so a lot of that is just sort of naturally, it's like the tide went in, now it's coming back out. But I think that's colliding with AI now, where AI seems to be moving a lot faster than people expected. AI has been kind of this theoretical big deal for, again, like 40 years. But all of a sudden now it is exploding. And there's a recent article of 300,000 layoffs in big
Right,
banks because
right.
they're outsourcing it
Right.
to AI. So it's
So
possible that
why
those two factors, yeah.
Peter, could I ask you a question though? So my question is, I see it a little bit differently. I don't see it as
Hmm.
a 4.2% unemployment rate. I mean, I have thousands of people hitting my inbox, over 150,000, great educations, all that. Not a lot affected by the H-1B in those
Right.
areas, and a lot of overhire and all that. I understand that. I'm doing this 30 years. My question is, why is there no peep about these massive layoffs
Yeah.
that I've been seeing? It's almost like to me it's bothersome, obviously,
Yeah.
but it's shocking. I mean, we're looking at
Yeah.
5,000.
Lauren, if I can interrupt
Does
you,
that
just
make
yeah,
sense?
Lauren, just because we have a big room, I want to keep it moving. I think Peter really Lauren's question is about is there political bias or something else like because I yeah it is trying to juxtapose what we all are acknowledging anecdotally what we read in the media. Like, do you have any thoughts on
Yeah.
that? I mean, or not?
Yeah, I mean, you would expect media to jump on this.
Yep,
Yeah.
That's their favorite hobby
yep.
is bad news about Trump, and so yeah, I don't know why they're not.
Yeah.
I've actually covered it a couple times, the layoffs, but yeah, mainstream
Okay.
media is not.
All right. Thank you
Okay,
for that,
thank
Lauren. I
you.
want to keep it
Thanks.
moving. I
Thanks.
want to go to Joe, and then Joe. Welcome. Good to see you, my friend. You got a question or for Peter? Thank you,
Yeah,
Joe.
yeah. Hi, Peter. Fascinating stuff. I was interested in your views, particularly as you were commenting on the debt picture, and what weight you put on what I think is the clear path out of this, from my view, which is a growth driven, keeping nominal growth above the nominal rates
Yeah,
path forward, particularly driven by AI. I mean, I tweeted and put in the nest this impact of AI. You can run your own models on if anybody wants to with Goldman Sachs report. They think it's going to lead to an annual increase in United States GDP by 0.4%. Well, if that's true, then by 2035, debt to GDP will be around 99%, moving from about what are we at 120 roughly. So we're gonna
yeah.
that alone, if you get that productivity boost, and all things being equal, the debt picture is going to naturally resolve itself. Especially if the economy runs hot. So I'm curious if you buy that narrative or dispute it, or any pushback you might have.
Yeah, certainly by the narrative that we can get faster growth. That's part of what Elon was talking about when he pulled out of Doge and he said, I'm going to, instead of focusing on the spending, I'm going to focus on the economic growth part. Uh, from AI, yes, and also from robots. So I think robots, Elon's already talking 50,000 next year. There are a couple of reports recently predicting billions of robots within 10, 15 years. I think robots and AI together are going to be comparable to the internet and the internal combustion, in other words, automobiles. I think those are going to be absolutely massive in terms of economic growth. Unfortunately, Congress can raise spending faster than the economy can grow. So whatever number it is, they're just going to tack on. Maybe they'll double it. So, in terms of growth saving us, I think that's not going to happen.
How does that, from what, through new social programs? Because like the biggest driver of the deficit right now is interest rates, right? Which would naturally come down with more productivity.
It's across the board. I mean, it's interest expenses, yes, but also, I mean, they've got more discretionary.
Oh yeah, it's all going
Yeah.
up. It's all going up. Hey, by the way, Peter, since you're the master of the great one-liners, when you started to say they can raise spending faster than whatever, it sort of reminded me of markets can remain irrational for longer.
It's
Stay solid.
bingo. Yeah,
You got to
beautiful.
work that
Yep.
one in, Peter. So now, and I want a footnote on or at least tweet at me when you make
That's
that.
right.
Okay, I'm going to ask you one final question. You can stay along, but I need a
Yeah.
hard stop. So putting this all together, and we'll keep the room running for a few more minutes after you leave. So we'll talk behind your back. But putting this all together, what should an investor do? And Dilly will not let you go. So I want to know. So whether it's what do you think? What's the message from Bitcoin and gold? Whether it's Bitcoin, whether it's gold, whether it's stocks, whether it's bonds, what's an individual to do? What would you tell? And again, it's not financial advice, but how
Yep.
would you think? Because look, it's a confusing world. If you're not confused, it means you're not paying attention, right? So what should an investor to do? We're just trying to help each other here.
Yeah, I think that one of the easiest plays right now is that government spending will continue getting out of control, and that's worldwide. That is every single country on earth. Maybe Dubai's got it under control. I don't know, but that's pretty much everybody. So that means Bitcoin if you've got the risk appetite. If you don't have that, then gold. I think both of those are going to continue going up here. The big beautiful bill, I think, basically tells us that there is no predator to spending in Washington. There is no barrier to it because all these years the Republicans said they were going to cut spending. Now they finally have the chance. They have unified power. They have Elon. They have Trump who wanted to cut spending. Boom, they dropped the ball. So I think at this point we are guaranteed nothing stops this train, as Lynn Alden puts it. So yeah, I would either buy gold or Bitcoin as much as you have appetite for. I still like stocks just because I do think that the growth story is going to hold up. So I mean, just habitually, partly because I'm a gambler. I look for bubbles and I buy them. I wait until the whole world complains about how something's a bubble, right? I want to hear everybody saying, "God, everybody's so stupid. They're buying into AI." And as soon as
Right.
I hear that, boom, I jump into Nvidia and I stay there until they complain about something else being a bubble, and then I jump into that
Got it.
bubble.
Got it.
So,
All right.
right, ballast, betting on government spending, and then the little fun part, the part that you're okay with losing, not the college fund for the
Sure.
kids. For that part, chase bubbles.
All right, got it. All right, Peter, listen, this has been fantastic. We've been
Music to
going on
my
for a little over
ears.
an hour. I hope you'll come back again. Everyone learned a lot. We really enjoyed it. I hope this wasn't too painful, but
Not at all. It's
this
fun.
was a lot of fun, and you're always welcome, Peter. And no, everyone give Peter a follow. This has been great, and enjoy the rest of your day, Peter. We're gonna still talk here for a few minutes behind your back about how much
Awesome.
we're all the fanboys, how we're all gonna vie to be chairman of the Peter St. Ange fan club. All right, take care, Peter. You be well. Be well.
All
Did
right.
you
Yeah,
hear
yeah,
Thanks. You
that,
yeah,
too.
George?
yeah. We'll do. So Dilly,
Did
Dilly, you
you
there?
hear that? Yeah, did you hear that? He told you to buy Bitcoin. George, you just brought on a Bitcoin maxi. This guy is a Bitcoin bull. I think that you are edging closer and closer to buying, aren't you? You're
I think
doing
I
it.
think George already bought Bitcoin.
I don't think he has it yet. He needs my help with it, but we're gonna get him in.
You're right about that actually.
I want to get George running a node, and I want to get him with some miners. I think
Hey,
George is a
Dilly,
full Bitcoin
Dilly, can we,
maxi.
Dilly, can we start a coin? Can we start a coin? How do you do that? Can we
No,
do a
George,
coin?
we're not going to shitcoin. Jesus Christ. We are going to Bitcoin only. We are not shitcoining. This is not, that is not the arc we're going on, okay?
I want to be like Trump. I want my own coin. All right, so let's have one of your friends in. Dilly, do we let this Tao guy speak? He
Yeah,
got
we
in here.
love Tao.
Okay,
Let's
but
talk
as
to
long as
Tao.
Tao doesn't post porno pictures in the nest. Hey, Tao,
No,
well,
no, no, no. I'm not gonna do that. No, I just wanted to add to the discussion regarding the I think layoffs and AI because so I come from the fintech industry, work for a very big global. No, I'm not going to dox myself, but big one of those big four fintech companies out there regarding payments, and we've also recently had massive layoffs actually twice. Once last year in June, and then this past November, and it was due, I believe, it was due to the sort of cultural shift of using more AI, and because of using more AI, I don't think they needed as many people to get the same amount of work done. And so we had really big layoffs then. And the people who were laid off has yet to still find like a new job somewhere. So the market out there in the tech industry, just to let everybody know, it is not great. I've been having conversation here and there regarding that. So no, I just wanted to add to that conversation
You
because
know,
I think
yeah,
you guys were talking
yeah,
about that.
Ty, I
Mhm.
really appreciate that. And everyone in the room will remember we had Jordy Visser in a couple months ago. I also had Jordy on YouTube, and he's bullish on stocks. And Dilly, if you can find it, go back and on my YouTube the replay of the well on my YouTube, but we have both a space replay as well as I had a video with Michael Kramer. But Jordy,
Yeah, I'll find it.
Yeah, Jordy was making the point, and I didn't quite get it initially, but he was like to the point Tao's making. This AI thing, he's a huge AI guy. He loves Bitcoin as well as you know. I'm not Jesus. What am I saying, Tilly? But anyway,
Dude, you are primed to be a Bitcoiner. That's the thing. You
Dilly,
just need to
Dilly,
expect it.
I'm
Swallow
vulnerable.
the orange pill.
I'm vulnerable. You know how I'm vulnerable.
Yeah,
Okay.
that's why I'm going to take advantage of you, George.
So anyway, to Tao's point, Jordy was talking about how a lot of these companies, you know, the next few years it could just be a complete productivity story. He was, well, by the way, we're having Adam Parker in tomorrow. Everyone should come and listen to Adam, former Morgan Stanley strategist, but don't hold it against him. He's got his own thing, Charvariat Research Room. That was a space we tried to have a couple weeks ago. But Adam when I had him on a YouTube interview, he was talking about he was giving the example of like healthcare companies, and like there are many different types of healthcare companies, whether it's HMO, a drug company, this, that, whatever. He was pointing out, like, you go into a doctor's office, and the first thing you do is they give you a clipboard, and you got to fill out all these pieces of paper, and then there's another one, another one, another one. He's like, duh, like, can't we do any better than that? And so he was pointing to AI and productivity enhancements. So, Tao's point, you don't need to grow your top line. All you need to do is get rid of people and replace them with AI. And so Adam and Jordy are two people I really respect. I'm not sure I'm technically capable of agreeing with their arguments, but it made a lot of sense to me. So I'm shilling for the space tomorrow. Everyone should come and listen to Adam Parker. I think it's at 5 o'clock tomorrow. So Tad, your story you've told anecdotally, I mean, there's some smart people talking about this, so I think you're onto something. And Tal, if you've been one of these companies for a long time, it doesn't really matter which company it is. I don't really care. But I presume if you were in the industry, 5, 6 years ago, didn't a lot of these guys just hire like drunken sailors because like they had all the money and stock prices were flying. This is before things collapsed at the end of 21, 22. So there was arguably, or not even arguably, obviously, there was a lot of extra layers of fat that they could easily get rid of. That's even before you start thinking about AI. Isn't that correct, Al?
Yeah, no, we were hiring quite a bit back then. And the other thing is, we were also hiring abroad. So it wasn't just like, oh, H-1B visa people coming in here, but there's a lot of that hiring going on right now, actually, in Poland and different countries. So, but I wanted to say something really quick. Like, the company also forces people who are still working there. I'm still working there. That we need to use AI. Like it's a requirement that you use AI so that it can show productivity. And if you're not using AI, they actually track this sort of thing. Oh, you're not using AI. Why do you have only certain commits in the code that's not AI generated code? They're gonna question you on that, and then they track the amount of AI you use on your Teams chat, on your Outlook, and all these applications. And, oh, if you're not using AI, then we're just going to remove sort of like your subscription to it because we actually gave you this power to work faster. So they are really tracking this sort of AI usage. So yeah, I just want to say that.